today we'll be going through RSI Divergence. This is another one of the indicators I use for my trading system. So let's get started. You go to indicators, search up RSI, Relative Strength Index. So pretty much RSI tells you when, for example, Bitcoin, any asset you're looking at, is overbought. All right, so here anything over 70 is overbought, and when the asset's oversold, so here below 30. So yeah, and RSI divergence is pretty much using this indicator with the chart and trying to determine when an asset's been overbought or oversold, and if it's likely to reverse. So let's get started with an example. So we got bearish divergence here. So we have this high to this high. So we have a high to a high on the chart, but with the RSI divergence, I'm going to have to redraw that one. But on the RSI index, we have a high to a lower high. So see how this one's going up, this one's going down. That means these are divergent. And that led to this was an indicator showing this big down move of 76%. So on the high time frame, obviously it has more weights, it's more reliable. So yeah, it showed a bigger move, obviously. Okay, so that's how you use bearish divergence, because you have RSI index makes a high to a lower high, however the chart makes a high to a high. So that's one type of divergence, and the other type is bullish divergence. So you have just move across, so you have this low to this low, and then you have the same place, you have this low to this low. So on the chart, this is the complete inverse. You have chart making a low to a low low. However, on the index, you're making a low to a higher low. So this one goes down, this one's going up. This shows bullish divergence. So with divergence, it shouldn't be used just alone, because RSI can remain overbought or oversold for a long period of time. You should use RSI divergence as confluence for other trading systems. So you can use it with ranges, for example. So one of the big things in my system is ranges, deviations, and divergence. So you have your range here, your low to your swing high. You can do either or. So yeah, and then you would have had your RSI divergence. If we go down to the lower time frame, like a daily chart, maybe you go here. So you can see, it might be a bit cleaner on the 3-day. You can see the RSI divergence here. Same thing. You use this low here to this low, and then this low to this low. You got your RSI divergence. Then you have your range. I'll go through this stuff in another video, combining everything at the end of the series. However, for the moment, we'll just go through it now. So you got your range, your divergence here, and then once you reclaim the range, you could use this as a long entry. When it closes, target. So stop would be below there. Target 1 would be the range high. So that would be target 1. So yeah, that's pretty much how you use RSI divergence to show when you might get a reversal or or even just a slow down of the pace. So like sometimes RSI divergence might show when you might like not be going up as much. So yeah, that's pretty much it. If you guys like the video, like this type of content, I'm just going to be making free educational videos. Try to help improve your trading, teaching you what I use as my trading, for my trading system, and yeah. Alright, thanks for watching the video, guys. If you like it, subscribe. Sweet.